What's up, traders? If I could show you one trick, one secret to trading price action, this would be it. Okay, I've got the clickbaity stuff out of the way. Let's get into it. We're looking at Amazon this week, and something happened on earnings that is indicative of a pattern you will see again and again. And once you see it, you're going to be able to trade it very easily. Let's use TradingView here to go down and look at the after hours and see what happened right on earnings. So let's go back in time. Let's imagine we're back on Thursday, February the 3rd, 2022. The market is reeling from Facebook's bad earnings. The whole market, the NASDAQ, the S&P, all our tech portfolios are going down. Everyone is afraid of Amazon announcing bad earnings because Amazon bad earnings would surely indicate that the market is really going to crash, like everybody's been saying for the last couple of weeks. It's not. So everyone was on edge. Everyone was waiting, thinking that they were going to be bad and the worst was going to happen. 4 o'clock comes. And right here, there was a bar that looked like this. To replicate it, I need to use a little trick here. You had a bar that spiked down. People sold it because they thought that the numbers were bad or whatever reason they did. The market book may have emptied out of orders and it let price go down that far. I don't know why, but you can see it on a chart. Price spiked down very quickly within seconds and then launched. There was something about the way that price behaves in instances like this. News events, catalysts like earnings, but it doesn't just work in stocks. It actually works in Bitcoin and other things too. And I'm going to show you in just a moment. But there's just something about this. Maybe it's because people got in thinking bearish down here. And then as it rises up, they panic. They close their positions. They get liquidated. They stop out. Whatever you want to say, cool story, bro. This works. Happens a lot. Let's look at Facebook. Facebook, Wednesday of this week, February the 2nd. Market was a little more optimistic. We're recovering from the bottom that we made on January the 24th. No one knew at 4 o'clock on Wednesday that hundreds of billions of dollars of market cap were going to be wiped out on Facebook earnings. But as we now know, that was the case. And what's interesting is that in that second, can't see it here, so I'm going to draw it for you. There was a wick, a green wick, a bullish wick that came up, and some unlucky person bought Facebook at about $326 minutes before, or excuse me, not minutes, seconds before earnings came out. And of course, we know what happened to them. Well, I'm sure they panic sold it somewhere in this gap and got out of their position. And that's what creates the huge movement down like you see here. I don't know why people buy it up at this point. All I know is it is a price action phenomenon that happens a lot, and you can use it. I use it. This is one of the key fundamental components of my trading, is looking for these price swings the other way. I'm a contrarian. If you're a contrarian, you like being right when the rest of the market's wrong. For some reason, everyone bought it up and they were wrong. One thing you can do to really filter it out is establish your range. There's like a little prior range of trading that happened right here. Of course, this bar, at first, be patient, let it spike up, and if it breaks the range to the downside, that's your signal to go the other way. Doesn't just work in stocks. It also works in Bitcoin or any cryptocurrency for that matter. Let's go back in time a little bit more. The FOMC meeting from January. Rather boring day. Some may ask, why does Bitcoin respond to the Fed? Well, it's because a lot of low interest rate credit has been buying up cryptocurrency for the last 2 years. And if interest rates go up, then some of that money doesn't make its way into the ecosystem. And so everyone's looking to see what the Fed's going to do. And so right at 2 p.m. on the FOMC meeting, price spiked up. It broke this high only to very quickly close back inside this price range. And that was your sign. That was the signal of a reversal. Very, very useful in lots and lots of cases. The stock market did the same thing. The S&P futures, at the very exact same moment, did the same exact thing. This happens a lot. So if you're just looking at price, if you happen to be looking at a chart, or if you're up at 3 a.m. watching the 30-second chart of Bitcoin because you're a degen, and you see a big spike in one direction only to have the candlestick close back where it began or back within a range, that should clue you in to be that contrarian and try to go the other way. Alternatively, if you got in on a breakout trying to go this direction and it closes back inside the range, that's your warning. Don't ignore it at your peril. So hopefully, now that you see it, you'll identify it for yourself in the future. Minus all of the technical analysis, I think this is the most powerful thing that you can look for in price action because it's happened for years and years. You can even go back and read in Reminiscences of a Stock Operator, where 100 years ago, it's mentioned that this phenomenon around news or events like that happens. There's something about the way markets work. It's not just computers. It's not just whales. It has to do with us. It has to do with our human psychology and how we handle fast emotional events and being wrong. So be wise to it and trade wisely. We'll see you in the next video.